Hey, hey, hey. What's happening, everybody? Welcome to the Gold Rush. My name is Sam Gatlin. I am an editor at the Gold Rush, and I am joined by my esteemed colleague and co-host, Mr. Jason Purrs. How's it going, Jason? He looks like he's having some technical difficulties, so let's just have a
I'm
party.
here. I'm ready. I'm
Here you
ready.
are.
Sorry
All right,
about that.
cool.
I do old people things from time to time, but I am here, ready to go. Excited to talk to everybody about gold today. A lot going on in the gold market. Sam and I are always, getting hit up about gold's rallies over. Is this it? Not to mention, I'm sure, Sam, you get tagged in the same things I do, where people are like, "Look at this top. It's the end of the gold market as we know it."
That's my favorite, Jason. That's what keeps me bullish because markets don't top until everybody agrees that it's going up in price. And
It's going to be
that's
the end.
so far away from that. I still firmly believe that gold is going to $8,000 before the end of the cycle.
I think you're right, Sam, and there's a lot of reasons why. I brought some stuff to talk about that today. Just going through the deck. If you look at some of these charts and you guys stick with us for the full show, you'll see some reasons why we still think this thing has legs. And I have no reason to believe that the gold rally is anywhere near done, but it might be shifting. It might be shifting into other parts of the precious metals market, which is still very bullish for gold.
Totally. Yeah. So let's just get right into it, Jason. Let's start with slide number two. I think this is one of the best charts I've seen come off your desk recently. Here is so you have three lines. There's a lot going on here, so stick with us, everybody. So the blue line, the one that you see at the bottom here, bottom right-hand corner of the chart, that is bonds versus commodities. So if this line is going up, bonds are outperforming commodities. As of late, you can see it's just been straight sideways after a massive downtrend post COVID. Commodities absolutely ripped. I think our equally weighted energy index rallied 500% during that time. So that's just the futures alone. But you had stocks like AMR that rallied like I think it's 20,000% just in absolute terms. But they pay a little dividend, so I think you could have gotten.
Hey, we all can't be Josh Young and having 1,000% returns during that period of time.
Man, yeah. For all of you that don't know what Jason's talking about, go check out last Thursday's video of the Gold Rush Live, where we talked to Josh Young, who is, in my opinion, the number one fundamental analyst for energy. So he absolutely nailed the post-COVID bull market. His fund made over 1,000% during that time. Not many funds posted numbers like that, Jason. I know you even crushed it during that time, but didn't do 1,000%. Like that is
Nope.
really, really up there. Like that has to be top 1% of all funds,
And
right?
I'm in futures and with leverage and
Yeah.
all these things like, just thinking of, 1,000%. We had some of our best returns those years, but once again, like that's crazy. So that just speaks to his ability to kind of pick the right stocks. Not really my forte, but man, he does it well. And if you can find somebody who can pick the right stocks, like Sam does a great job of that, Josh does a great job of that. That's the way to really do it and really ride the commodity cycle. If you don't have access to futures, the future space.
Totally. Yes. Back to this chart though, Jason. So we just talked about the blue line, the bonds versus commodities. You also have the red line, which is stocks versus commodities. And you can see that stocks have been very much outperforming commodities for several years now. And then the third line, the gold line, is gold relative to commodities, which is also dramatically outperforming, and it's pushing new multi-year highs, new all-time highs on this chart, really, this gold versus commodities. But to me, Jason, this chart suggests that bonds are due for a massive catch-up trade. And, you and I have been kind of stubborn on buying bonds. It's in a massive downtrend. We're trend followers at heart, so it's really difficult to want to get involved there. At least wait for like a 200-day high or something like that. But man, looking at this chart, I have to think that we're in for some kind of catch-up trade in bonds. And, in addition to that, you and I talk about the cycle that we're in, Jason. So, we kind of think that 2020 ended a nearly 40-year bull market for bonds where money was essentially free. It really helped fuel the speculative tech trade for decades and the dominance of the US stock market over the entire world. So yeah, let's hear your thoughts on the bond trade. Are you with me? Is it time for a bond catch-up trade, or does it need more time?
No, that's
You're
my main
waiting for the 200-day high, is that it?
my
Or
my long
150
term my
days?
long term thesis is still no. Now, once
Yeah.
again, I agree with you. Like if you're looking at the short term, bounce is probably going to happen.
And
I
there's been
wouldn't.
no bounce at all. Like we saw that
Yes,
crash a few years ago, and it's just been dead sideways. Like there's been nothing there.
there's nothing that really tells me this thing is really about to just take off. One is if you look at it short term, and this is a good season for bonds. We have a lot of volatility in the market. People like to rush to other things during those times. It might be the season that we see a little bounce in bonds. I think August has some bullish seasonality. I haven't looked at the seasonality in bonds for a while, so don't quote me on that, but check that out yourself. Um, but I think it's a decent time to say, hey, we could see that bounce. If we're ever going to see it, it'll probably happen between now and October. But in the long run, like I still think like, okay, like if we're looking at, I know a lot of people are looking at commodities and going, oh my gosh, copper. And we had this conversation just a little bit ago where we're talking about the fact of if you look at copper in price in, go to China, go to Europe, because there's futures markets in all these areas. A lot of people don't know that the U.S. futures got murdered. Like, yes, that was a huge hit, 20% down, very nasty. But if you look all over the world, some of these other futures markets did just fine. They had pullbacks, but nothing nearing, 20%, nothing nearing 10%. And then they went up higher afterwards. And also, you're seeing the international miners look great. Some of the ones, even in the United States, look fine. They've held up very well. So I don't think that the copper trade is done yet. And so if we look at that and we go, okay, the commodity cycle's on still. So far, for me, if you're looking at the U.S. Copper, I want to see the international copper miners still hold up, the U.S. copper miners hold up, and the global copper futures hold up.
So,
But if we
Jason, let me just stop you for a second because I've heard this theory of how the U.S. copper futures got destroyed, but all the other futures didn't really see that kind of downside on that one day when the tariff man came out and said something crazy like 50% tariffs on copper futures
yeah,
or copper imports, I should say. Um, but man, aren't the financial markets efficient, Jason? Like I know like they're not perfectly efficient and that's why we can make money, but I gotta think there's gotta be some arbitrageurs out there that are willing to take advantage of that spread, but you haven't seen any of that recently. You haven't seen any bounce back in the copper futures here on the COMEX.
I wouldn't expect to see that. That's something that is one is just because of how little people actually trade the copper market. For example, a fund like mine, small fund, I can trade the copper futures. If we're looking at, Renaissance or any of these huge funds like Medallion and so on, you can't trade the copper futures with size like that. So once again, you're kind of see that move into different areas. Like you're going to see the copper futures in China still holding up well. Sometimes you'll see people like, try to trade the spreads and so on, but they're so small, they're not going to move that market. And so another thing to talk about too is something we just talked about as well, which is if we're looking at copper also and commodities generally, this is an important lesson for anybody who wants to trade commodities. Commodities do not V bottom. So everybody was looking for copper. People would write us and Sam and I and go, "Hey, is it time to buy copper now that it's cheaper? Now that it went to 425 or whatever, 430 was the bottom. I can't remember the exact number, but everybody wanted to buy it, and I kept saying, "No, it's not the time. Like, wait for it to bottom out, wait for it to go back up." And the reason why is commodities have rounding bottoms. So most of the time, like you're never going to see a commodity just V bottom and go back up. It's very rare. It happens from time to time, of course, but it's a rare thing that happens in the commodities markets.
And Jason, isn't
Stocks
that
V
exactly
bottom.
what this chart is showing us here?
What? Commodities are V bottoming?
That they V top. No, I'm interpreting that wrong. Because these are all blow off tops here that I'm seeing. So
They're blow off tops, but they're the opposite direction.
yeah,
So most of the time you're going to see these kind of like look at the, for example, go from '08 to 2010, see this huge rounding bottom area. And most of the time that's how we're going to see most of these markets. And yes, at times when the stocks, for example, or bonds V bottom, you're going to see them massively outperform commodities at those moments. So you're going to see that at times, but that's because this chart is relative. So if you look through the commodities market, I'm not talking about the big ones. If you look at, yes, gold sometimes can V bottom, same with some of these other ones, but most of the time you're going to see more of a rounding bottom, even those quick bottoms. Even if you look at oil in April, everybody always looks at that huge spike and goes, oh my gosh, negative $50. Go to the actual contracts or the spot price, which really was around $20. And we sat at that zone for a little while. And we really kind of bottomed out, moved around between 20 and 40. And it wasn't until October or November 2020 around the election that we really got that move over 40. So most of the time you're going to see that in the commodities markets, but they certainly V top. So if you're looking at cocoa, for example, cocoa is a great example of this. That's a V top that just happened pretty recently. You'll see that in those markets quite a bit. So anyways, getting back to this chart real fast, what I'm seeing is that if we look at the commodity cycle and we go, okay, if the miners are holding up and we still see copper hold above 425 in the futures contract, HG, I'm still going to be bullish on the commodity cycle holding up. Now, if that starts to break down, if the copper miners start to go, I'm going to start to think the opposite. But for now, I think it's still holding up very well. So because of that, and I think we're going to start seeing, energy start to move as well. I think the grains, I'd like to see those move as well. But really, cattle has put so much pressure on and it's something that nobody's talking about because very few people trade the cattle futures. But when when the price of cattle is so high, the price of grains is going to stay low. So until that kind of changes, grains are going to be there. But I think energy is probably next. Once again, we're not just buying it here blanketly. There is some interesting things going on. Not something I want to buy today, but I do think that because of that long term, I'm still thinking the commodity cycle's on. So I don't want to get into bonds too heavily. I'm sure there's going to be trades. Short-term traders out there, take those trades. Do not listen to me about my long-term view. I'm looking into year end. But if you're looking at it month to month, you want to trade it now, you want to trade it for a bounce, go for it. Nothing wrong with that. But I just think it's stuck in a range.
yeah. Let's talk about a trade that's working right now, Jason, and that's precious metal miners. So, we brought along this chart of the Gold Rush Miners Index, which is our custom equally weighted index, which holds some of the largest mining stocks in the world. You have the largest Newmont mines, that's NEM, which, by the way, has gone absolutely nowhere since 1987. Jason, do you think Newmont's ever gonna break out? Like, if it's ever gonna do it, like this cycle is the time to do it. Like, should
Maybe,
happen
maybe
pretty soon.
next, maybe next cycle. I don't know. Like
I mean, like it's gone through three cycles without breaking out. I mean, how long can it last?
I think it's gonna happen. I think I agree that it's probably gonna start to move. By the way, I love this index. You made a couple of these. These are great. It's a great way of just understanding the sector in an equally weighted way that's going to tell you where this thing's headed. And so for me, like this is the big thing that I keep thinking about here. No matter what, I want my miners positions. If we're in a disinflationary, I'd be really surprised to see that. But if let's say we're in a long-term disinflationary into year end, gold miners are going to do great. They're going to love it. They love real rates falling. Inflation will probably start to pick up while they're lowering rates. That's a really good environment for gold miners. I want to still hold on to them. If we're in an inflationary environment, let's say the CPI keeps moving up. Core CPI was actually over 3%, so that's pretty interesting. So if we're looking at inflation continuing to pick up into year end, I think gold miners do great. It's the one trade in the commodities market that I'm bullish on any way you look at it. And honestly, that's how the best trades happen because we're really just getting the probabilities on our side. As long as the probabilities are on our side, that's the trade I want to take.
Jason, can you explain to me what a core CPI is?
So we're looking at more of instead of just like um the majors that we're looking at, like if we're looking at rents, we're looking at all these other things. We're looking at
That's what the headline CPI
the
is.
headline CPA. Yeah.
Okay.
We're actually looking at the core rates, which are actually looking at um, the rate of change of these things and seeing where they end up. And we have a little bit more like the headline CPI is mainly going to take a few things and it's going to be weighted more towards those things so they can make it look a couple different ways. But the core CPI kind of gives you a real flavor of what's really going on
I
in the
see.
market and in the environment. So it's something that I like a little bit
So
more.
it's like the equally weighted index versus the headline being the market cap weighted index.
In a
Kind of that
way,
same
sure.
philosophy.
For
Okay.
sure, like
That's what makes
it's
sense in
not
my head. I don't
it's
know
not
if everybody
exactly
else.
that, but sure, yeah,
Yeah.
that's a good way of looking at it. It's just for me, it's more of a hey, I can look at this and kind of get a better picture of what's actually going on.
Okay, interesting. Back to precious metals, though, Jason. We're seeing an extreme tick up in risk appetite. This is one of the best charts to watch if you are a gold bug trading these mining stocks. You want to see the junior miners outperforming, and that's exactly what's happening recently. So this is the junior gold miners GDX relative to gold futures or the gold ETF GLD. Same difference there. But it's not just this that's outperforming. You can look at something like junior gold miners relative to the big miners, which we do very often. You can look at it a ton of different ways. You can look at the junior silver miners relative to the big silver miners. You can look at the junior silver miners relative to silver futures. There's a million ways to slice it, but the bottom line is we're seeing these risk appetite ratios tick higher. And to me, that's extremely bullish. And it's not just in relative terms, Jason, but also in absolute terms. So this is another one of our equally weighted baskets that we have created because we've grown very frustrated with the ETFs out there, like GDX. In my opinion, it sucks. It doesn't do a good job of showing you what's actually happening under the surface with the mining stocks. And then it's same for the GDXJ. It doesn't really show you what's happening. It does to some extent, but it doesn't really give you a good information, in my opinion. I think this index, the Gold Rush Junior Gold Miners Index, provides tremendous information on what's happening truly to the junior miners. And right now, they're breaking out of a multi-decade textbook rounding bottom formation here, Jason. So to me, that's about as bullish as it gets. The soldiers are following the generals. And I mean, what more can you ask for if you're a gold bug?
Yeah, this is what, when we're talking about gold and we're talking about the precious metal sector and we're saying like, hey, gold could do whatever it wants here. As long as it's holding up, it's not breaking down. Like, let's say we start to get it below 3,000, we just start crashing. That's a different thing. If we're looking at holding up, consolidating sideways, that's exactly what you want to see while the gold miners, the junior gold miners, even the explorers, the mid-tier names, they're all doing very well. They're holding up great. They continue to move higher. I mean, if we're even looking at GDX year to date, what's it up 70%? I mean, that's just wild. Like, so many people continue to kind of look at this and just go, well, gold's doing this. It's a big sector. It's kind of like, we had the same conversation about Bitcoin and Bitcoin miners. And everybody going, yeah, Bitcoin dominance is crazy. Now we're seeing it run. Now it's time to buy the alts and so on. Now it's time to buy the Bitcoin miners. Like, it's the same thing in precious metals. Like, gold is basically Bitcoin. So think about it that way. And then if we look at the Bitcoin miners, if we look at some of the small cap alt names and so on, like the altcoins are basically the miners, the junior miners, the explorers. So as long as those are outperforming, that's what we want to see. It's the same thing. Like Bitcoin could chop between 100, 120. We don't really care. But same thing with gold. Gold could chop between 3,500, 3,000. I'm not going to care that much. But if we get to that point where we start to see these other sectors start to break down, it's saying something. But I mean, look at this chart. Like we're looking at GDX is almost 70%. There's nothing that's performing like that.
It's
While
so
everybody
good,
continues
Jason.
to talk against it, it's crazy.
And then you have XLV at the bottom of this chart, which you can barely see. It's fallen off the chart. It's so bad. These healthcare stocks cannot catch a bid. So yeah, I love this chart, Jason. And it does a great job of showing what's really happening with these mining stocks. And we also like to benchmark to the March 4th, 2024 date, which is when gold futures decisively resolved that multi-decade base that everybody knows. And since then, I think three of the four major mining ETFs are up over 100% over that time. And you can look at a lot of other ETFs, like all these AI ETFs, and they are amazing. They're great, but they're not performing as well as these mining ETFs.
No, and we have so many people who like will look at that, look at this and be like, "Oh yeah, I missed the move or whatever." It's
Yeah,
like this thing has continued and it hasn't stopped. And once again, like we're looking like the old highs for GDX are pretty far away still. The old highs for GDXJ are pretty far away still. If you look at some of these miners, it's the same thing. It almost looks like this is just getting started. Now, I
totally.
know a lot of people look at a 70% move and go, okay, that's over, especially if you look at what Sam is anchored to, looking at over 100% move, you go, oh my gosh, it's over. Most of the time, that's how trends start. Now, gold miners, when they move, they don't just move like 10, 20%. They move 100, 200, 300, 400, 20x. Some of these names are going to be up 20, 30x at some point. And Sam and I always joke about it, which is the targets we put out. We're going to, at some point, be like, that was ridiculous. It's probably going to triple. It's probably going to quintuple. We don't know where these things end up. So I think as long as the trend's up, I want to be massively bullish on this area. And as long as the regime's right for me, and we're in the right type of market for these things to really take advantage of, which we really are, they're going higher. I would be very surprised to see GDX just roll over here and start going off of a cliff. I bet to year end it looks good. Usually we see a little volatility between September, October, but GDX has bucked every bad trend this year anyways. So like it'll probably buck exactly what I just said. And that's even more bullish. We were talking about seasonality the other day. When you look at seasonality, it's not just, hey, I want to buy this thing because this is a bullish month. It's sometimes the best way to look at seasonality is, okay, let's say GDX has it's a bad month seasonally speaking. Let's say it only goes up 30, 40% of the time in this month. And then we see GDX hold up very well in that month and rip higher. That's telling you something. That's data telling you it's bucking the seasonal trend. It's stronger than you think, and it probably could go higher.
Totally. Yeah, I love all of what you just said. And for all of you who are doubting this precious metals bull market, I encourage you to go study the previous cycles and just see how extreme the uptrends are, especially the 2000 to 2011 gold bull market. I mean, you certainly had some corrective waves during that time, but man, it was a very resilient bull market for precious metals back then, and we think we're in that same environment where gold futures broke out about a year and a half ago, and they've had a nice run here, but it's the beginning of a brand new secular uptrend that could likely take gold futures to 8,000. And it looks like Jason's having some technical difficulties. Old man strikes again. Um, so what do you say we finish up with some natural gas? So I mentioned, so I mentioned at the top of the show that we had Josh Young on last week's episode of Gold Rush Live, and he's into the natural gas, and his fundamentals are suggesting that there's something here, and then our seasonality chart is also suggesting that it's time for natural gas futures. This is just looking at seasonality over the last decade, but you can go back to the inception of natural gas futures in the United States, and you'll see the same seasonal trends. December, January, February, not very good times to own natural gas futures, but But here in August, pretty consistently, natural gas has screamed higher. And you have a very, very compelling setup here structurally in the natural gas futures. And as you can see over the short term, it's getting whipped down here to new multi-month lows. But man, more long term, I think they're going to come in here and buy this dip and they're going to rip this above $4. And I think natural gas futures will end up in a new primary uptrend that will eventually take it towards $10, like we saw back in 2022 when there was that whole Russia situation where, I think the TTF, which is the natural gas price in Europe, I think it hit something like $250. We like to complain about our energy bills here in the United States, but we're paying currently less than $3 for natural gas. So I can't even fathom what it was like there in Europe. So yeah, we have that going on. I think Jason is working through some technical difficulties here.
I
Um,
think my computer just went completely out and all the electricity went out. But I am here, audio so far.
Speaking of natural gas, Jason, it sounds like your house needs some of that.
But the grid, that's one thing that is happening in Ohio, especially, is we are overworking our grid at the moment. That's a whole nother story. Something we could talk about at some point, though, on Gold Rush. That'd be fun.
Totally, yeah.
There's been some deaths even. It's a crazy conspiracy story, but there's been some very interesting things with AEP and even some executives that just all of a sudden disappeared or committed suicide. So it's been kind of crazy here in Ohio, energy wise.
Gosh. Okay. Do you guys have any of the nuclear energy going on? I know that's a hot trend right now.
We are building a new facility actually, so that is actually happening right now. So that is interesting. And the one thing that we do keep seeing is that there's all of these nuclear facilities that are popping up all over the U.S. right now, and I think we need them. We really do need them. I mean, that's the thing. People keep saying, "I believe in the AI story." AI is just getting started, and we're going to need quantum computing, or we're going to need this. Like, we're also going to need energy and a heck of a lot of energy to sustain any of these things. So I think it's really bullish for this whole sector. You're going to need more copper, you're going to need more silver, you're going to need more commodities generally. So I think it's going to be a very interesting time to be in the commodities market. I think it's just going to be part of the cycle. I think we're going to see AI trades taking off, and then those will slow down, and then we'll see the commodity trades taking off, and then those will slow down. And I think that's a great way to make money over the next decade.
Jason, we have Wavy McFly chiming in on the chat here, saying that you need your own strategic petroleum reserve. Is that something you're willing to do to keep the power on, to keep the show going for the
I do
fans?
I do have a generator. It's just not I don't know exactly what happened. All I know is that all of a sudden the power went on and off in the house and now my computer won't turn back on. So I'm kind of like worried that my computer's dead, but we'll see what happens. But thanks, Wavy. It's a great idea. I should probably just have backup computers to keep the show going.
You need to. The fans need you on here, Jason. So,
I do have three computers at this moment, so like you never know. You never know. Oh my god, it turned on. Okay.
hey, good.
So natural gas. What's going on here, Sam?
Yeah,
What?
I kind of just walked through this setup while you were offline, but yeah, just we're in the best seasonal month of the year for natural gas futures. Meanwhile, you were just talking about how if something's bucking the seasonal trend, that's really a big heads up. So natural gas futures are making new multi-month lows today during a very strong seasonal period. So either it's due for a pretty epic failed breakdown and the bulls are going to scoop this one higher, or there's something wrong with natural gas futures and it's likely heading back towards $2. I personally think that the bulls will step in and scoop this one higher and bring it back towards $4 over the short term, but we're going to get a lot of information from the market whenever we close the month of August.
Yeah, I agree. And something that's always interesting just for you natural gas traders out there, Think about when you get towards those month-end contract rolls, what happens in the last week of each month for natural gas traders is the natural gas ends up going down a little bit. So be ready for that volatility. Short-term move thing I've been back testing, just kind of looking at lately, just because it was very curious to me, but it's just based on the rolls. So basically, if you in futures contracts, you have to roll the contracts to the next month. So when you see those rolls happen, most of the time the contracts actually go down in price for a minute. So that shakeout could be happening around now. And then we could go up higher. I'd really look for a false breakdown signal here. I think a false breakdown signal is very viable if that's going to happen here, and this thing will probably rip a lot higher. I agree. I think there's a lot of things to be bullish about natural gas at the moment. But once again, wait for the price signals to happen.
Totally. Yes. Our opinions don't matter. Price is the only thing that pays. So, yeah, definitely have a stop in place with the natural gas. That's definitely a wild child. So let's just finish up with this. For everyone that's not familiar with All Star Chart's Gold Rush, we publish several reports every week. We talk about precious metals, we talk about commodities at large, things like corn and cocoa and cattle. Basically, every commodity we cover. We talk about currencies and bonds. We do everything FIC related here at All Star Charts Gold Rush. If you're interested in our trade ideas, you can get an annual plan for $12.99, and it's risk-free. You can get your money back within 30 days if you don't like what we're doing for any reason at all. We won't ask any questions. You'll get a full refund there. So yeah, come check out what we're doing. I see Wavy's asking for my favorite energy play right now, and ASC Gold Rush members got that on Friday. In our commodities note, I outlined my personal favorite setup in energy. It's a small name, just a few $billions, but I think this one has a lot of potential upside. And it's breaking out of a massive base. And yeah, it's just getting going. It's been consolidating for nearly a decade. So there's a lot of big bases out there in energy. I think if JC were here right now, he would say that the Imperial Oil is the number one energy stock. That's the IMO, the big Canadian integrated energy company. Um, I think ExxonMobil owns about 70% of the Imperial Oil. So you have a low float situation there, a high days to cover ratio in the Imperial Oil, and it's making new all-time highs. How many energy stocks are making new all-time highs right now? It's a short list. I could count them on my two hands, I think. Wavy.
Yeah. Can you hear me, Sam?
Yes, I can.
Okay, good. I'm back. Sorry about that, guys. But yeah, there's a lot of really interesting energy trades right now in the market, but I think Sam and I are still in the same boat. Besides Sam picking some great things, it's going to take some time to work that energy sector out as a whole. So pick and choose your spots, follow someone like Sam who's picking them very well, and you make some money.
That's right. All right, Jason, let's wrap the show here. We appreciate everybody for being here in the chat. Shout out to Risky Business, Wavy McFly. We've got Gain Investments in the chat. Shout out Gain Investments. All right, that's a wrap. Thank you all for being here, and we will talk to you again, same time, same place next week here at Gold Rush Live. Adios.